too many bells and whistles here, operating all of this on my own. So, so if you wouldn't mind, again, as I say, Lynette, and I'm going to make this brief, is an excellent top financial analyst. She works with an organization, and it's called, hold on 1 minute, ITM Trading since 2002, and she has been tracking gold and silver, I know, and has been analyzing what's going on with the asset classes, the long-term trends and cycles. And she does this very astutely from my estimation. And she's trying to, I think, also make the financial system and the upcoming reset understandable to the general public, which is to her credit. So with that, I'm very sorry about this beginning. And if you could go right ahead and give yourself an introduction. And also, we want to go into the area of cryptocurrencies, the whole virtual financial system, the changeover that's happening now, and also the role of artificial intelligence, if you have any knowledge in that area.
Okay, I really jumped into that pool in October, but I've been in these markets on some different levels since 1964. So I like to say that I've been groomed for this moment in time. And just when I look at that path, my uncle was a major antique dealer, and he accumulated in that capacity a lot of gold when it was illegal for American citizens to hold more than 5 ounces. But he did it legally because he held it in the form that he could hold it in. Which were the pre-33s. But I've been a banker, I've been a stockbroker, I studied business finance, and as a stockbroker, I cut my teeth on government debt because I figured they could tax you to get the money to repay you while I was learning what I needed to learn. And in that capacity, I stumbled across what was called non-dollar denominated bonds. All that gobbledygook means that these were bonds that were issued in different denominations. Excuse me. Sorry about that. But different currencies. And so that's when that was 1987, and that's when I started studying currencies. So not in my gazillions of economics classes did they teach me about currency life cycles, but I am also an artist, and I see patterns. And so when I started studying currencies, and in those days, you could talk to the head of a trading desk. So it was the head of Shearson Lehman's currency trading desk that actually taught me about currencies, and then studying and having these discussions. And that's when I started to see a pattern. I mean, there have been over 4,800 fiat, which means by decree, so government money, that no longer exists. And you can see the same pattern over and over and over again. And, everybody always thinks this time is different. And who knows, maybe it is. That's certainly not within my control. But when I see something that's happened more than 4,800 times, and it's happening right now in different places and has been happening to us, so I see the same evolutionary pattern. My bet is that it's going to end the same way. We're going to get the same result. And so that's basically my background. My mission is to translate financial noise into understandable language so that individuals can make educated choices. And I am a database decision maker. So, I go by the data, and I know people like that. I didn't really bring very much today, but I go by the data, and that's how I formulate opinion. You have the data, you have a different opinion. I can't tell you that your opinion is less valid than mine, but I study this all the time. And you see no gaps because we started out just doing it monthly, but actually 3 times a week, I do different levels of research reports. So I am constantly researching, and I'm looking for the holes. What do people need to understand that they don't understand now? And then I just go from there. And, it's kind of interesting to me that I am asked to talk about cryptocurrencies because I jumped into that a little bit more than a year ago when people kept asking me for my opinion. So I had watched Bitcoin since it was $7. One of my early clients had seen it and shown it to me. So I've been sort of paying a little attention to it, but not a lot. But when people ask me, you know, what I thought about it, so I've been jumping into that rabbit hole quite heavily ever since. And it's amazing the different directions that takes you. But it really is all about money. And it is about a reset.
Okay, now, so there's a couple directions we can go with this at this time, but I want to ask you if you're aware of the fork. I believe there's another fork coming up with Bitcoin, and that seems to be heavily discussed, at least on the YouTube channels, the various ones. And I think that that's possibly an indicator of something more than just, you know, the change itself and the split, whatever you want to call that. So I don't know if you're aware of the work of Quinn Michaels, but he's kind of making a lot of waves out there at this time because he's talking about the blockchain, what really, I guess, what it's built of, and also the fact that the person who originally came up with Bitcoin or the blockchain technology or the idea behind it, the white paper, is can't be found, if I understand it, that person. So so the question becomes, and I think I even heard you mention that, you know, we do know that the NSA wrote some kind of white paper over 10 years ago, if I understand it, and maybe you could address that.
Mm-hmm. Yes, they wrote that in '96, and then and if you look at even just the index of that white paper, I did a whole piece on it recently. If you look at just the index, you'll see the same kind of terminology, that the wallet and having it be trustless and all of this, that matches the way that everything is described there. So the person that magically, I think the timing of when it came out, which was 2009, was really interesting because that was as the markets were imploding and they were trying desperately to get control of them and put them on life support. And it was March 9th when they started all of that quantitative easing or massive injection, hyperinflationary really, injection of new money into the global banking system. And yet magically that's when Bitcoin was born. And this guy doesn't take credit, you know, I mean, so, you know, maybe it was just this wonderful person that decided to bring this incredible fabulous technology to the world, or maybe they knew very well because in 97, yeah, 97, we hit peak debt. And what I mean by that is that that's when we could no longer, by adding debt, stimulate the economy. And we can see that in the Federal Reserve monetary velocity graph, which is how often money changes hands, so how comfortable people are that they've got good income coming in, and then they're willing to take on more debt, and thus stimulates the economy. So they already knew going into 97, and long-term capital management was the first speculative derivative implosion. They already knew that the system was on its way out at that point, for sure. And by design it is. None of them are designed to last forever, just a certain period of time. So
okay, well, just to delve into that a bit, you know, and I'm not going to pretend that this is your area of expertise, so don't worry about that. But at this moment, you know, when you're talking about these events that were happening sort of all the same time, and you're choosing, I think, the year 2009, and because I have this whole other body of knowledge that comes from the secret space program, et cetera, I'm also looking to follow the artificial intelligence, the development of that. And I was aware, I don't know if you're familiar with the whole story behind Promise software and how the Promise software developed into what is in essence the AI, and that it went in the direction of not only targeting and profiling individuals, but also being distributed around the world with a backdoor that United States and the Mossad could get into, et cetera, et cetera. But it grew into this huge database. It started actually in the legal profession, if I remember correctly, and then went into law enforcement. It went into the intelligence agencies. Now it's well, worldwide, and it's gone way beyond that. But the reason, I know that backstory. So when you see this, I'm wondering if the 2009 situation, you said they were trying to get control. Perhaps they were trying to get control of basically what was an AI at that point already, and that this blockchain came out of this. And I'm not asking, I'm just throwing this out as a possible line of inquiry, because you got to look at the years, and we had sort of this crash in 2008 with the housing debacle, right?
Yes.
And so, go ahead.
Well, I was going to say that in all of my research, and I research constantly, there are all sorts of coincidences surrounding timing of things, which I don't really think are coincidences.
Okay. All right. So what about this, the notion of, I mean, did you get in on Bitcoin? I mean, you said you only followed it maybe later and started analyzing it. So you weren't in on the gold rush, so to speak, of Bitcoin.
No, I'm not a speculator.
Okay.
And I've also really had, see, here's the problem. People don't understand what money is. And if you don't understand what money is, then what happens is you get blinded by numbers, and the inflation creates nominal confusion, and they can take advantage of you. So no, I'm not a speculator. That is ether. It's not real. And in a money standard shift, I'm not saying, look, I know that's where we're going. I definitely do. And I can also see some benefits to AI and to the cryptocurrencies, but I definitely am an expert on the central banks. And so, when I read their documents all the time, and I have for years and years and years, and you can just see everything evolving. This is about really us volunteering more and more of our freedoms and our rights until we are fully, or pretty much fully, under the control of the central banks and the cryptocurrencies and artificial intelligence, where they'll make choices for us. If you read their documents when they talk about it, even regarding automobiles and refrigerators, I mean, if they want you to spend money, they want you to spend money. But I go back to money to begin with is a tool to value labor. And then if you have any excess labor, it's a tool to store it for future use. And the goal is to have the same level of purchasing power. So the same amount of dollars buy the same amount of goods and services in the future. Gold money, silver money is labor-based. And it has full utility across the entire spectrum. So there's always demand for it. So if you're trading your labor for gold money or silver money, you're trading labor for labor, which is fair. That's a fair way to do it. But for governments that want to tax and spend, that doesn't work very well, because if they do that, you notice it. And when we're on a gold standard, if you didn't like what the government was doing, you simply took those pieces of paper that represented gold, so dollars, gold dollars, and you converted them into gold, pulled it out of the financial system, and created limitations around what the government could do. And they had a real problem with this, as all governments typically do. So they transitioned us onto a fiat money standard. Now, the literal translation of fiat is by decree. But the bottom line is this is government-controlled money, and it's based on, well, at first, prior to the Fed taking over, a 1/20 of an ounce of gold backed a $1 bill. And really, you had inflation within a narrow range as demand and demand and supply varied. But once the Federal Reserve took over, that same 1/20 of an ounce now back $2.40. And I have all the proof from the Federal Reserve themselves on how much new money they created. They created the roaring 20s. Average prices declined, or the value of the dollar declined by 50%, but the average income more than doubled. So if things cost you twice as much, but you have more money to spend, you don't really pay attention to the devalue of the dollar. And so they created 1929 because then the general population were never in stock markets. That was for the elites. But in 1927, they gave the central bank a perpetual charter. The charter was originally due to be up in 33. In 28, you had the industrialists, the people in the know, the one percenters, those at the top, that sold into the general public that was attempting to emulate them because they saw the markets going up, up, up. They wanted in. So the guys in the know, the insiders, got out in 28. And our government and our banking system loaned the general population lots of money to buy these worthless stocks, these worthless pieces of paper. They pulled that punch bowl. They created 1929. This is a normal pattern of a money standard shift. And then they used that crisis to take the only tool that the citizen had to protect their purchasing power and hold the government's toes to the fire away. They took the gold away. In 71, what Nixon really did, there was a run on the dollar by other countries converting dollars into gold. So by 1971, we had less gold than we had after the confiscation in 33. So, I mean, I understand why Nixon did it. But what people don't understand is at that moment, what he really did was he handed over full power and control of inflation to the central banks. And that's why we have 2 cents, 4 cents left out of the original dollar's worth of purchasing power. But for those of us that were there in 71, and I was, you know, if you had a $20 bill in your pocket in June and you had a $20 bill in your pocket in September, even if it was brand new, they looked almost identical. But you went from a bill that was at least partially backed by gold, and so there created some limitations on spending, to a bill that was fully backed via debt. So just to kind of back up, move forward, and then take us where we are right now, we had World War I in 1914, first world war that ever existed. I do not think it was a coincidence that the First World War coincided with the era of perpetual central banking. So you had wars, you had chaos, you had the stock market crash, you had inflation. They reset the dollar from $20 to an ounce of gold to $35 to an ounce of gold, when you, the citizen, you just lost a whole lot of your purchasing power, 70% like that. And the same thing in 71. You had civil rights, you had women's lib, you had the Vietnam War, you had all of the protests. You know, there's a lot of chaos, 37% inflation, 45% stock market decline. And then think about the 80s. Because the 1980s were our roaring 20s. It was all about greed is good and the big shoulders and opulence. And we're entering that period again now, if you kind of notice. And so taking us to where we are today, when they make a money standard shift, they always allow the normal guy to make more money in terms of dollars, okay, than he normally would make, so that they embrace the change. They think, look, this is good for me.
Yes.
And then, exactly.
We call it the carrot and the stick, routine. And also, you are sort of centralizing this, it seems, on the United States, but was this a worldwide phenomena?
Oh, yeah, absolutely global. Yes. Okay,
so what I'm seeing right now is actually, I guess, the carrot side of it. What we're seeing, the basically things are going up with Bitcoin, but there's starting to be a bit of a rockiness, I think, with the forks. And then their IOTA, I don't know if you studied IOTA or are up to speed on that, seems to be a challenge to the Bitcoin even technology on a certain level, although not very many people are talking about it. And then, of course, the entry of the question about AI and who runs the AI, who orchestrates it, and who's in charge of it, and all of that. So can you package that together?
I can package that together. I find it interesting that cryptocurrencies, and particularly Bitcoin, are always portrayed as gold, and there's a finite amount of it. Well, I'm sorry, but there's more than 2,500 new cryptocurrencies. So there's not a finite amount of it. And every time there's a fork, I am not an engineer, but every time there's a fork, now there's 2 more cryptocurrencies. And I think, are you talking about the SegWit 2 with this Bitcoin
yes.
fork that's coming up? You know, it's, and that those that are part of this currency, the community there, get to determine all of these rules. But, you know, who really holds them? It's anonymous, which is what they need. They need that anonymity. And there does seem to be some dissension. But right now, what I'm seeing is an awful lot of development. And the central banks are not alone in that development. We have some central banks that have adopted AC Chain, which is a cryptocurrency out of China, who holds title or digitizes title to hard tangible assets. And that's their goal. And when you use either Bitcoin or Ethereum to buy AC Chain, that turns into an SDR. Now, were you aware of that one?
I listened to your show about it. I don't know that my audience will be familiar, so you might want to lay that out a bit for them, because the link between, you know, the ACC and the SDR, you know, is not going to be that clear to everyone, I don't think.
Okay, so I'm going to back up to 71 again, because it was in 69. Now, I'll back up a little further to move forward. Okay, in 44, the U.S. became the world reserve currency, which means that globally, all assets were now valued in terms of dollars. And the IMF, the International Monetary Fund, was developed at that time to oversee us, to make sure that we maintained the value of the dollar to that $35 to an ounce of gold. And then globally, all currencies were pegged to the dollar. Okay, so that was actually, and the countries could convert dollars into gold at $35 an ounce. So that was a huge advantage, because we were the only country on the planet that could print the money they needed to pay international debts. So that was a very big deal. But it became very apparent as we were financing the Vietnam War that we were printing a lot more dollars to the gold that we held in deep storage. And so there was a run on the dollar, and you saw foreign countries converting dollars into gold, pulling them out of the system. So we already knew then that the dollar's hold as the world reserve currency was coming to an end, and the International Monetary Fund created, boom, the SDR. Now, it stands for special drawing rights, but it is not a claim against anything. It is a basket of currencies. So US dollars, back in the beginning, there were like, I think 16 or 18 different currencies that were in there. The German mark at that time, etc. In the early 80s, they consolidated that down to 5 currencies. When the euro was created in 99, that went to 4, where it's remained until 2016. But when China was put into the SDR. But you see, people put value in them, but these things are made up, and they're made up out of nothing. They say that the IMF has the cleanest balance sheet because it doesn't have to run debts, because it pushes a button and bam, you've got a boatload of SDRs. But back in the 60s, the SDR was created to take over then as the world reserve currency. And in fact, we volunteered the dollar. But then Kissinger went to Saudi Arabia, created the petrodollar. So Saudi Arabia would refuse, and they controlled the Middle East oil supply, refused to accept any other currency but US dollars for their oil. And so the petrodollar was born. So you have two things that are the foundation of the dollar's global prominence, which is debt, the treasury note, and the petrodollar. Well, 2016, we saw runs in both. That's not apparent to the normal person because they don't know how to look beneath the skin. That's what my work is about, just showing you where to look, right? But the SDR created back then what's called a substitution fund, and all of these mechanisms weren't disbanded, they just went to sleep. When the crisis hit in 2008 and they had to put the system on life support, in 2009, China said, what about the SDR? And as soon as I heard that, I said, well, that makes all the sense in the world because everybody has them. Go to the USPS or any postal service website around the world, and in their search bar, put SDRs, and you're going to see them pop up. So they didn't have to reinvent the wheel. They merely had to tweak the wheel that was already in place. And they did. After China said, what about the SDR? They tested the system by injecting a massive amount of new out of thin air SDRs and injecting them into the global system. And they also brought back the substitution fund. Now, the substitution fund is significant because if you are holding dollar-denominated debt or loan, well, that's another form of debt, or dollars, and you're a country or a global corporation, you can deposit those instruments into the substitution fund. The IMF will, boom, 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 convert them into SDR denominated instruments. So that does a few things, but all of those excess dollars that are no longer required for the global system comes back to our shores to generate that hyperinflation. So they're going to try and moderate it or control it through the substitution fund. But remember, all of this, everything that they're doing is experimental. Everything that they've been doing since 2008 is experimental. Just like they say they're going to run off their balance sheets now. They're not going to buy any more mortgage-backed security. I mean, it's garbage. It's experimental. I don't think they can do it. But the IMF in 2011 gave us a blueprint of how they would roll this out. And they've been executing that blueprint.
Okay, but I guess the main question that someone would ask is that, has their plan changed? In other words, has this introduction of the cryptocurrencies, is that all part and parcel of the plan? And if so, how do they merge? How do they come together?
Oh, that's a good question. So yes, I mean, they've actually been trying to do away with cash since the 20s. Mm-hmm. Okay, so this is not a new theme, and they've been looking at it all these years. That NSA white paper that was written in '96. I mean, you know, can I say that that's absolutely it? Well, no, but do I think it is? Yes. So I definitely think that it's planned. And just recently, the Bank for International Settlements, the BIS, so those are the two key banking cartels in the world, the IMF and the BIS. They just came out with their money flower on showing how they would convert the currencies and even allow some paper currencies to coexist, and even some maybe private cryptos to coexist with the central bank cryptos. And I think we're seeing a movement globally right now for different central bankers adopting different of the cryptocurrencies. I don't see them as adopting one consistent one yet, but I think there's R3 that just came out that many have adopted. I'm pretty sure it was Cambodia that adopted the AC chain. But the SDR stated in that 2011 document that they had to create a market for SDRs, and China has been tasked with bringing that forward. And then they had to also have global assets valued in terms of SDRs. Right now they're valued in terms of dollars, but valued in terms of SDRs. So the OCT accomplishes that.
Okay, the ACC chain, are you saying just to get the
I'm sorry, the AC chain.
Yeah. Okay, so it's valuing, are you saying assets around the world? And when you talk about assets, what are the assets? Is it labor, gold, silver, metals? You know, what is the assets?
Well, they would like all of the above, but so far they have done T. I mean, it's new. It only started last May. It was the first ICO. And it holds title to these physical assets. And so they've done T, they've done property in Texas. Oh, they just did another one. I don't remember what it is, but yes, they're evolving into every tangible asset. And then there are some that, and they're also doing something with stocks, but stocks kind of straddle two fences, because they're obviously not tangible. You get a certificate. And the theory is that it's part ownership in a corporation, but oops, sorry about that. But the way that these are set up means that the way that the stock market is set up, that you don't really hold it. You don't really own it. It's owned by the big banking cartel, Seed and Company, DTC. I mean, there's so many topics we can talk about, Carrie.
I know.
Much we've been lied to.
Yes.
You know.
Okay. But my understanding is also that some of the cryptocurrencies, if not all, could be viewed as stocks. I mean, that's a question, right?
Well,
like
sure,
an investment.
They're intangible. Well, I wouldn't think of it as an investment.
Okay. Because how the IRS is gonna, I mean, we had this sort of discussion with Paladin, I guess, and he's sitting here listening to this discussion and going to ask any good questions that come to his mind, and I will credit him when he does. But in other words, you know, so I don't want to get off topic here though. So do you want to finish your thought with
yeah, because what they're really doing with the cryptos is they're creating a product. But where does it have utility outside of its one sphere, which is really simply as a tool of barter, which goes back to our training. We used to trade our labor for somebody else's labor. Then we traded our labor for government debt that we were required to repay. Now we'll be trading our labor for an algorithm. I work too hard. I don't want to trade it for an algorithm. So, you know, I want to trade it for something of value. I'm definitely a tangible kind of gal, and I'm not saying that I will never own cryptocurrencies, but the primary and the most important function of gold and silver is to hold your purchasing power intact over time. So in the future, they need a big crisis, just like every single monetary shift. They need a big crisis to conclude this transition. And here's my bet. My bet is that when the cryptocurrencies are crashed, because you're right, the IRS and regulations and blah, 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 you know, they've shut down exchanges. The governments and central banks can create a lot of problems for cryptocurrencies. They can make them illegal. They can do all sorts of things. But what they want right now is they want that critical mass. And yeah, it's my understanding, or some say that 3% is that threshold. When they get acceptance of it, they make that transition from a from some kind of cryptocurrency to a dollar coin or a Fed coin or an SDR coin, or which is just digits in the computer, and you're comfortable with it, so you volunteer it, just like we did in 71, just like we did in 13 and 14, and we don't even know that we're volunteering it, because everything's going to be run by a smart contract. And people don't read the dumb contracts now. You think they're going to read the smart contracts that sit on top of the blockchain that guides everything? I mean, you talked about artificial intelligence. Examples from the IMF of this blockchain technology with the artificial intelligence talks about, well, okay, you've bought a car and you haven't made the payment, or I don't know, maybe you haven't registered it or licensed it. Well, they could remotely, the contract would disable the car. And with artificial intelligence, it could even drive it home within a certain period of time, however the contract was written. So, you know, they talk about refrigerators having the artificial intelligence and ordering you need orange juice. So they order the orange juice, they take the money out of your account, they have the orange juice delivered. Then if you don't want it, you send it back. So what they're really trying to do is make it easier and easier and easier to spend your wealth. And the thing about the AC chain coins holding titles, let's say that a crisis happens, and okay, this is what happens to a mortgage during these periods of time. After a planned reset, on average about 9 months, the bank will come back and they will reset your principal payment and they will reset your mortgage payments. You have until such and such a time to pay it off. If not, everything resets. Well, most people can't do that. They will not have the money to pay it off or maintain it. So there's a lot of property that would normally come onto the market. But what if the government, because they're so awesome, said, here, if you would simply put the title, your equity, or your title onto these coins, we'll forgive this part of the mortgage. There are a lot of people that would put that property onto the coin, but it's not like 500,000. They break it down into little digits because cryptocurrencies are infinitely divisible. And because in crypto form, they are also globally transferable like that. Before you know it, you need money, you've got everything, you get comfortable putting everything, you know, in the crypto space, the title to everything, and you are just a renter, you're renting everything ultimately. And this is how they would do the wealth transfer. But that's how the SDR would back all of the assets. And then they could say, well, look at this. Now we have an SDR and it's got all these tangibles, trees, properties, glasses, you know, whatever, any tangible asset on there. And now all of a sudden they have something of value and they have full control, and they're technocrats. They're not elected officials. Their job is to support the system. It's not to support the individual. And which is one reason why I believe they chose China to spearhead it. And by the way, in order for China to be included in that SDR basket, the US had to agree to changes in the way, in the rules that enabled them to become a part of that basket. So, you know, we know what's going on, and I think we're part of it.
Okay, so I don't know if this is off topic, but I liked when you talked about the fact that the dollar had a basis, like because it was a currency, it couldn't go below zero, you said, but that when you get into the crypto area, they can value it at less than zero. And that's quite, I think that's an interesting dynamic. Can you talk about that?
Oh my God, yes. They've been talking about this in a lot of their documents, the IMF, for years. And in 2015, they did a paper, you can Google it, it's an easy read, breaking below the lower zero bound. And in it, they talked about how they would easily take us cashless and get you to volunteer it because, hey, you know, we've got, especially those of us that are older, we're used to cash and we wouldn't just give it up easily, but they can get us to volunteer it. Because globally, 85% of all transactions are still cash transactions. I'm not talking about the size of the transaction. You're not going to buy $1 million house with dollar bills, but of the number of transactions. So they have to get rid of cash because cash is a debt instrument with a zero coupon. It doesn't pay you interest and it doesn't charge you interest. You do lose purchasing power via inflation, but at least it's a zero debt instrument. However, in order for them to get you to spend, they now have to attack your principal. So they need to get rid of cash. And the way that they're going to do it, according to Breaking Below the Lower Zero Bound, is at the central bank window where all of the commercial banks go to get cash. Okay, now remember, the commercial banks would be like JP Morgan Chase, Wells Fargo, Bank of America, you know, the big guys. And then the little guys, the community banks, the
savings and loans.
Thank you. The savings and loans and the, I don't know, it escapes me for a moment. But anybody in that money realm has to go to those guys to get the cash. So all the central banks have to do, and they say they can have this in place within weeks during the next crisis, is to... Oops.
Sorry, just have to see if I can lock the room. No, doesn't let. I don't know why this happens, but go ahead. I'll just have to kick people out if they try to come in.
Okay. Well, the way that they would do it is to charge banks interest at the central bank window. So it'd be invisible. We would never see it. They would subsidize those fees until they tested everything. And then they would have the banks, like the Chase, the commercial banks, transmit those fees to the retail public. So now you go into Starbucks, and if you use your debit card or your credit card, it's $5. But if you use cash, it's $6. Well, what are you going to do? You're going to use your debit or credit card. And then they will translate it because they always want distance. They don't want you to understand that this is the central bank policy, right? So then what they would do is when you want to make a withdrawal or a deposit, the fee that would be charged would be large enough for you to notice. And they would put a timestamp on that cash. So it's not like you can take those paper dollars and stick them under your mattress. Whenever you would go to use them or spend them, then that discount, that fee would show up wherever it was. And in that way, because it would be larger than, always larger than the fees for using the digital money, you volunteer the cash and you don't even know that you've done it. Then they say this, I just read another report on the 1st of this month from these guys. Once they're there, once everybody's digital, there are no limitations to how low they can push interest rates, which means how quickly they can charge you when they want you to spend those dollars to stimulate the economy.
Okay, so what you're saying is how long does this go on, this sort of transitional state, what it sounds like, where cash is still in operation, but becomes, I guess, worth less and less useful. So what is the period of time that you think that lasts?
Well, we're pretty close to the end now. And actually, you know, it's 4 cents according to the Federal Reserve, but I was just looking at that graph, so I'm prepping stuff for tomorrow, and it's consistently just going down. Okay, here's the thing, and going back to the cryptos and kind of tying all of this in, there's a tremendous amount of research that is being done on all of these new technologies. including the quantum technologies and the ability to change the codes, break the codes, whatever, steal the money that's in there. When presuming there is no black swan event that takes the control out of their hands and they can control it, I don't feel as if, and I'm not seeing that the technology that they're ready for the full transition. So I'm thinking we might have another maybe year or two. I don't know that we're at that critical mass adoption yet either. It doesn't mean that nothing happens between now and then, because the problem is that they have, and maybe purposely, painted themselves into a corner, because the debt levels and the leverage with all of these derivative bets that have been created since 97, all of this speculation that's been created since 97, the banks, the markets cannot afford to fall 4% where you've got Deutsche Bank, Morgan Stanley, a lot of the banks completely insolvent. And because they're all incestuously intertwined, like Deutsche Bank is classified as a global universal bank, which basically means that they, in some way or another, touch every single financial product on this planet. So it doesn't matter. It could be a CD, it could be a bond, it could be, you know, those are products. That's all they are. They're products. And it's about managing how you think about them and what value they can get you to put in them, but they're just products. Deutsche Bank has the largest derivative bet book on the planet. And so when they go, that's it. It's like dominoes falling, or one of the other big guys.
Okay, Deutsche Bank, yeah, I have heard that the concentration or the attention is on Deutsche Bank, but it's no accident that this is a German bank, right?
No, it's definitely no, you know, there's some things I'll say and some things I'll think.
All right.
Okay? But what I will say is that the European Union was doomed to fail from the beginning, because you have all of these different economies that are now pegged to the German economy. And when something is pegged to it, that means that it has to behave like it. So while they couldn't go in and take over Europe militarily, well, they're doing it fiscally. And this is the way that they're doing it, because they've benefited tremendously over the years, just like China has with our agreements, has benefit over the years with that pegging, and allowing others to borrow at really, take on a lot of debt at really cheap levels that really shouldn't have. I mean, if you think of an individual, if your credit rating is bad, how likely are you to get the best interest rate out there? You know, you're not. You're going to get the highest interest rate out there. But if you're pegged in this union like they were able to borrow a tremendous amount of money very, very cheaply and buy a lot of German products. So that's a wealth transfer mechanism. And particularly with Greece, you know, Goldman Sachs, through the use of derivatives, had enabled them to hide a lot of their debts to qualify to be in the EU. And you know, look at what's happening in Greece. That's what we're looking at.
Okay, well, what about the Rothschilds? Because my understanding is they own most of the banks. And like, I think it's as high as 95% or more. And so what is your understanding? Because there's a link from the Rothschilds to the Vatican as well, and how this whole system is run, at least from the top down. And then there's a role that the IMF plays, subsidiary to that, and so on and so forth. So what is your understanding in that regard?
Well, you know, I really always sort of veer away things that I can't personally prove. So I don't really like to comment on them because I'm a database decision maker. But we certainly know that up until I believe it was 2013. Don't hold me to that date, but it could have been 2013. The Rothschilds set the price of gold, and that twice a day. And I mean, that's still the way the process is done. But they were the ones that actually were the key players in there, and they got out of that several years ago. So Rothschilds, I'm not saying that they don't own gold. I'm just saying that everybody always likes distance. So are they moving things? This is wealth transfer. So yeah, and there's definitely a hierarchy, and people are blinded by dollars or euros or yen, but that's just a symbol and it's just a number. The real wealth, that's dynastic wealth. That's the kind of wealth that they hold, which is primarily real estate, rare collectibles, and gold.
All right. Well, okay. What about the gold? So how does the crypto and the gold-backed currency, or silver-backed, in other words, is there a relationship there, and how does it's going to continue or is it going to be completely separate? In other words, is gold and silver going to rise in value as has been predicted, like when the dollar no longer, I don't know, is the reserve currency, if that dynamic ever really happens? And then are the cryptos kind of contributing to that push? And then how do the cryptos relate to gold and silver?
Okay. Well, this goes back into the normal life cycle of every currency. And so what happens is you end up in hyperinflation. Now, they want you to think that the cryptos are as safe as gold. So a lot of people that had been storing gold, and there's not a lot there's more outside of the US than there are here. So they've been flying to the cryptos. Ultimately, when the whole system crashes, everybody will lose confidence. That's why they need a trustless system. However, they need the cryptos to crash as well so that they can introduce the central bank cryptos, allow you to convert those cryptos into these. But there will be, and the IMF has talked about this, there will most likely be a component of gold in there, which is why you see China and India and Russia. The IMF has the third largest gold holdings, presuming, everybody's revealing. But they're holding gold because they need our confidence to use the currency. And imagine the level of confidence when all of the stock markets, the bond markets, the derivative markets, and I want to talk a little bit more about that, and the crypto markets implode. What kind of confidence are you going to have in anything then?
Okay, and Paladin's raising the Shanghai Gold Exchange, and we know that China's been hoarding gold, around the planet.
And no gold leaves China. If you go to China and you've got a gold necklace on, you better declare it on the way in because you're not taking it out.
Right. So that's got to mean that gold is going to be very significant in the future, right?
Exactly. What people miss is the utility. Okay, there's a reason why gold is all intrinsic value, and that's because it has properties that no other mineral on the planet has. Plus, it's indestructible, so we can account for it. But the cryptos are used in cyberspace as a tool of barter, but you can always convert, and this is my intention. I know that that's where we're going, but I want to wait until I have to convert my hard-earned wealth into some speculative or cryptocurrency, because gold holds your purchasing power over time. They can manipulate, they can do anything they want with it. It's cheap. It's $1.10 for a central bank to control 100 ounces of gold, $1.10, and I'm not exaggerating. CME Group publishes the central bank special program. So they can make things look like anything because they're just on a computer. That's a button push. It doesn't cost anything to do it. But yeah, why are the central banks buying gold like crazy, except for apparently the US? If it wasn't going to play an important role. It's the same role that it played in 33. You can trust the new money. This is from Roosevelt's fireside chat. You can trust the new money because it's backed with good money, which is the gold they confiscated. So that will happen again. So yes, I believe gold is going to have a very important role in the transition. And the other part, just going to that, is how do you do a reset? Well, it's real simple. It's the same way they've done it those 4,800 times. You take something that has no intrinsic value, dollars, euros, yen, whatever, no intrinsic value, it's used in one place for one purpose, and it loses value over time. And you reset it against gold money that is all intrinsic value because it's utilized throughout the global economy. And then gold, in terms of fiat dollars, rises to cover some portion of all of the new dollars, euros, yen, all the new fiat money that's been created. So I use a really, really simple formula. I'm not trying to get you to the penny or turn you into a technician, but in the system, money's created from debt. In the current system, now in cyberspace, it's created via transaction. But, okay, in this system, it's created from debt. You take all the debt that exists and you divide it by all of the gold, of which there's a finite amount of it. I don't care, how much there is, but there's only so much. And you divide the debt by the gold, and that will get you somewhere near what that number would be. Just to make my life easy, I use the Economist debt clock, and I use data from the World Gold Council as well as the Department of the Interior, so I can tell you with high confidence, conservatively, if they did the reset today, then you would see spot gold at north of 9,500 and spot silver north of, I think it was 627. And even though that sounds outrageous, it's actually extraordinarily conservative because that only takes into account the public debt. If I use the IMF's numbers, where I want you to do a whole lot more work to come to those numbers, triple that. Now, what we don't know, what nobody's going to know until they actually do it, is what that cover ratio should be. So for example, in 1933, based upon the amount of new money that they had printed, and again, I have all that data, they really should have revalued it to 4250. But I don't think the population, they felt that the population could have dealt with that big a rapid decline in the value of the currency. So that's why that peg couldn't hold. In 71, they reset it to $42.22. And so you have two things. You either have a planned reset, or what we had after 71, what they're having in Venezuela right now, because they haven't yet done a planned reset, is a market-led reset. So in Venezuela, as example, because this is like right now, it was 169 bolivars for an ounce of gold, and it was in that range for many, many years until they confiscated monetary gold in 2011. And then in 2013, they had the best stock market in the world as the currency was hyperinflating. And I believe the last time I checked on the gold in terms of Venezuelan bolivars was something like, I don't know, 1 million bolivars, 10 million bolivars, something like that. But the bolivar has no value to it. You can't buy an empanada with it. It has more value as a napkin to an empanada. But you can pay off a mortgage. The thought. It's the strategy that governments use they don't care about taking on this debt because they know in fiat money, the value just keeps going down and down. So they pay these debts off with dollars that have less value and then ultimately no value. That's the hyperinflation. So it isn't might this happen, that's how they perform a reset.
Okay. How about the derivatives? You said you wanted to bring that up again. So
yeah.
How is that working into this current reset we're going through?
Okay. Well, I think there are a couple things about derivatives. Number one, once the debt peaked or peak debt hit in 97, what do banks know? They know debt and they know leverage. So that's when they started out with the speculative derivatives. The derivative that imploded the system in 2008 was minuscule compared to all of the speculative derivatives that are out there, but they never washed any of them away. And so what they did since 2008 instead was create formulas to make them look a whole lot less, and yet they're also reported in notional value. Now let me explain that one a little bit because it's such an important concept. And it's part of what they call nominal confusion. So if you had a $20 bill 20 years ago and you have a $20 bill today, nominally they're identical. They're a $20 bill. But what it would buy you 20 years ago versus today, or even 10, or even a year ago versus today, is vastly different. So when they report derivatives, they always report it in notional value, and they admit openly nobody has any idea of the true value that is at risk. But what these things are simply bets against the price movement of underlying stocks or bonds or real estate, or whether or not a corporation has taken on too much debt, or currencies, or all of these things. They're based upon the price action, okay? And about 80% of them are tied to interest rates in a world where you have 90% of the countries anchored somewhere near zero. Now, but they're starting to spike now. There are a few things that are happening right now that could be indicating a shift has already begun, okay?
Yes.
I can talk about them, but I'm not quite prepared to put my technical neck out on the line, but I'm watching because I'm noticing a big shift. And so whenever I see shifts in patterns, I pay attention because I know it means something is going on. But in 2005, going back to the derivatives, in 2005, you remember the major overhaul they had in the bankruptcy laws? And they made it a lot harder for individuals to declare bankruptcy.
Yes.
But they gave derivative owners who don't even have a relationship, if it's against a corporation, no relationship to that corporation, they gave them super seniority. So if they could, the derivative owners, which would be like Chase and JP Morgan and Goldman Sachs and all those guys, if they wanted to, they had the ability to go into a corporation and force a default and then liquidate assets to cover what they say that they owe them. So if you're a vendor to that corporation and you have a legitimate claim, oh no, you're on the bottom of the list. If you're a bondholder or a stockholder, bottom of the list. It's the derivative owners, which you and I can't even be, that go to the top of the list and can force the sales and liquidation of assets to cover what they say, what they determine they're due. That's really what's going to transfer the rest of this wealth. If it is in crypto form, if those assets are in cryptocurrency, it makes it even easier and less visible to do that because it's a trustless system. It's just peer-to-peer. So I think that the crisis is going to force a lot of wealth onto a lot of titles, onto the coins. And now they've got...
Well, then that moves them under the ownership of the banks, or the ownerships of the derivative holders, as you call it.
Yes. Yes, unless they're done through... Because I haven't seen any other cryptocurrency tied to the SDR. And nobody's brought me one. They may say, I don't know what I'm talking about, but, you know, bring me one. if that's not a big deal.
Well, so are you saying it's all going under the ACC? Is that because that's the only one tied to the SDR?
No, I'm not going to say that's the only. I'm not. First of all, I believe that's the only one, and I'm not going to say everything is going on there, but they are doing big push to push the titles on there. And so, you know, and I don't know what the IMF is going to ultimately come up with for their cryptocurrency, but I do know that they want a whole title to everything.
Okay, well, I have a question about valuing assets around the planet, because how do you value an asset, for example, in Africa, when China or the US has gone on in there and taken over the corporations and owns it, and the ground and the gold in the ground and so and so? How does that go on a balance sheet that belongs to Africa in any way?
Well, that's a great question. And actually, the globe has a history of going into different countries, like England went into India and basically robbed them of all of their natural wealth. So it doesn't really go into Africa, but it definitely positions whatever country that is. China is voraciously accumulating energy assets globally.
That's right.
So, you know, it definitely puts them in the driver's seat, because we can look at what happened in Puerto Rico recently. They were so heavily indebted that when a crisis hit, well, they've more than doubled their debt since 2006, but none of that money went into their infrastructure. It didn't go to the population. It went into the politicians' pockets. And so now they're still without electricity. So that's what's going to happen to those countries. It's just a function of scale. But of course, that's how wealth transfer occurs. Crisis, and then boom. You never let a good crisis go to waste.
Well, it's like the latest scandal with regard to Hillary and the uranium, right? So the uranium is now owned in America, at least in the northern east, Pacific Northwest, from what I understand, is owned, uranium one, I think they call it, is owned by Russia. Isn't that right? If that is still in effect, I don't know. But
I'm not really sure. I can't really
okay. And I know, for example, from a friend who lives in Australia, that China has gone in there and is buying coal, and I guess the land associated with the coal, et cetera. So these assets, in other words, because one might say, if you're valuing assets, that Africa has some of the richest assets in terms of natural resources, some of which have been untapped, and some of it which are being tapped, but we don't know they're being tapped because no one tells us. And, there's iridium in Afghanistan, and I think Africa as well. In other words, things that are used in computers and in high tech, the high tech world, and 0 point energy, and going into, the secret space program and all of that. So to say nothing about the secret space program and the assets they own, which Catherine Austin Fitts, I don't know if you know her and her work.
I don't know her personally, but I admire her work. Yeah.
Yes. So she's gotten very much into the black budget. And so that America appears to be lagging behind in certain ways when it really isn't, technologically speaking. And then you've got all this craft, which is valued somehow, that is flying around in the skies and actually is owned by what is in essence the secret space program, secret government underneath the United States, co-owned by Britain and possibly a few other nations. But this is the kind of thing, I'm just curious, valuing assets sounds like a really, like a quicksand, like it shifts a lot, and it's hard to.
It's a function of utility. For something that's been around for enough time, the way that you do it is you have to, this is where it's a little nuanced. It's not impossible, but it's a little nuanced, because what you have to figure out is the single most important function of that asset or that instrument to its creators. What were they really trying to do with it? The most, and it could be many things, but what was the single most important thing? And then you can go and look at how history has valued that. So for much of the tangible assets, that's actually pretty easy to do because they have a long enough history. I mean, there's history on real estate, there's history on gold and silver, there's history on oil, on coal, there's some history there. It would be more challenging to determine its value, but then it goes back to the utility. So for me, it's really, it's always about that functionality, that utility. How many different places can this one thing be utilized? The more it can be utilized, the broader the base of buyer. The broader the base of buyer, the higher the competition, and therefore the price can go. But
okay, well, let me interject labor into that, because labor is very interesting, especially going into the future when actually labor is no longer needed. This is what's human labor, that is. In other words, where do you go with that? How is that valued as an asset when nobody is needed to work, so to speak? Their work is no longer of much value, at least something done with human hands when machines can handle most of it, or 3D printers or whatever.
You know, I'm glad that you brought that up, because I started a little sort of series within my little series on the YouTube about corporate sovereignty. And that is actually, I've been gathering data on that shift, which has actually been happening for quite some time. Because in the 50s, labor was highly valued, and that's when all the pension plans came in, because they wanted to attract that kind of labor and hold them. And of course, there you had the growth of the unions, etc. But over time, then it was more on, well, how can we get the most out of cheap labor? Once we went on to a completely central bank controlled system, that's when that division between the haves and the have-not began to grow wider and wider. Up until that point, the average worker was paid via utility because they were so important to the process. But once they could create that inflation, see, for corporations, if you perceive that you're getting paid more money, then you stay in the job and you're kind of happy. And I'm going to come back and address your question in just a second. I just want to point this out. But the average income in 71 was like $7,133. And at that point, I'm not saying that they were rolling in it, but a family of four could live on that amount of money. Okay. The average wage now, I think, is something like, I don't know, 46, 52,000 a year. So it sounds like it's a lot more money, 7,100 to 52,000. However, family of four, if you're trying to live on that, you're under a bridge. You know, you're hand to mouth. Right. So inflation benefits corporations because that's how inflation is gauged, based upon the price of their product. So if they can push the price in terms of dollars of those products up, then corporations make more money. They pay the normal employees less, and then it rises to the top. We're coming into a period now where, as you said, a lot of the robotics, along with the artificial intelligence, the AI, are displacing the lower workers, the minimum wage, the manual workers. And so what is valued are really like the highest end, the engineers, you know, particularly because of all of this, it's all going into cyberspace. So the talent that understands that piece is actually likely to be highly prized because of the competition in the space to get it. And there is right now between, you know, Facebook and Amazon and Google and Apple. There's a tremendous amount of competition for those people. But
actually, for the higher end of those people, I'm hearing that Amazon employees, the lower end, are very very unhappy with their situation.
Oh, yeah, I'm not a fan of Amazon.
Yeah, no, I appreciate that, but I'm just saying it's important to clarify that, you know, you're talking about the top end. It is very interesting how even the middle kind of even goes away, as they say, right?
Yes. So yes, and that leads more and more to go to the top with fewer and fewer employees, which is why they're bringing up universal income.
Right.
Right? That's why they're bringing it up, because they know that they're destroying the jobs for the middle and the lower income end. But hey, we'll throw $1,000 a month at you, you know, $800 per child, except that that's also hyperinflationary. You know, we just think nominally in terms, you know, like, wow, wouldn't that be great to just get all that money for doing nothing? Well, we have those social programs. How's that work?
Right. Well, yeah, it's sort of it's really a big deception, because actually being valued for your creativity is the answer. But whether or not you'll be allowed to pursue that, and whether it'll be worth anything to anyone else, and whether they can pay you for it, is a whole nother matter. But what I want to do is ask you about how, I still, in my mind, am not clear, how does the value of cryptocurrencies, I mean, we see it going up and up, and you say it's based on transaction. It's going to be worth something because people are trading it, but at the same time, it's not backed by anything. So it's, you know, how are you having this gold backed sort of economy or system, and then the cryptos, or the virtual world, where nothing is based on anything to do with anything tangible on the planet? How do those two worlds interact on planet Earth?
I think it depends on adoption and what we'll accept, just like the fiat money. I mean, you can think about a debt-based money in a gold foundation in the same way. How did that happen, right? And we've lost value over time because it really is just a lie and a deception. And we've been willing to work for dollars that have less and less value, and even try to save dollars that have less and less value. And so when you go into the crypto world, now you're trading your labor, presuming you're getting paid, you're trading your labor for a mathematical formula. It doesn't have any value.
Okay, but its value to the worker, its value is what you can buy with it. Isn't that right? If in theory you could buy something with it.
What you can convert it into. Yes, yes. But what do you have to do to cryptos? Okay, right now, yeah, I guess you can convert some of them into goods and services. So I guess at the moment that you do that, just like fiat dollars, as soon as you convert them into a good or a service, you've locked in their value in that tangible. You're talking about the fiat money markets, the stock market, where you see Bitcoin go above $7,000. That's gamblers. That's you know, that's a gamble. They're paying more for it because they're counting on somebody being willing to pay more for it.
Right. Okay.
So there are two different things. Personally, I put no value in them, which is why I do not own any. But at some point, I'm certain they will be our tool of barter, in which case I will be forced to utilize them. And when that happens, when I need to utilize it, that is when I will convert a portion of my holdings, gold or silver, depends on what I'm going to need to do, right, into those cryptocurrencies. But remember, that's how they do a reset. It's not against a cryptocurrency. And as much confidence as there are those that have in these cryptocurrencies, you know, if it's really complicated to understand, then it's because there are things that are hidden. If only an engineer can understand cryptocurrencies, I have a problem with that. I'm not an engineer, but I can read and I can see what they're doing with them. And I'm a creative person, so I can come to an educated conclusion. But the way that they all intersect is that's the money standard they want us to go in, because the other reason is that right now, when a central banker makes a policy decision, for it to go through the whole financial system to see if they get what they were trying to get accomplished, it takes 17 or 18 months. Once it is a cryptocurrency, once everything is guided by a computer, that is instant gratification. Okay, you have $1,000 in the bank. Okay, we're going to charge you $5 to hold it there. Okay, so you keep that $995 in the bank and you don't spend it. Oh, you're not spending it? We want you to spend it. Okay, now we're going to charge you $100. You know, and they'll just keep charging it and pushing that button until they find where your hot button is. That's what they said they're going to do.
Well, I mean, what about the notion that you don't keep cryptos in a bank? You know, you keep it in a wallet, and then you keep that. The way they're selling it, they even say a paper wallet, for example, is the safest way, or something of that nature, or memorizing the number, or something, which is not going to be possible to have more than one number. But you know what I'm saying? In other words, they're not going to use banks. It seems interesting to me, because you're talking about the central bank and the bank this and the bank that. If this whole thing bypasses banks altogether, it sounds impossible that they would allow that, right, to happen.
They've had control for hundreds of years. I don't think they're going to go, you know, we've had a good run. Here, your turn. I mean, come on.
Yeah.
You know, and look at who's involved with them. Mm. You know, this is not outside of the system. Hey, now we've got a derivative on Bitcoin. It is the system. Mm. And they can create an algorithm to, I don't know, reduce its value in terms of digital currencies. I'm sorry, I'm not an engineer, but I'm pretty sure that if they wanted to make you spend those cryptocurrencies, what they want is they want everybody in the system so that they can control it. And they can, I mean, what's a central banker's job? To regulate the economy, the speed and control of the economy. So the money standard that they use, I guarantee you they're looking at all of the different ways that they can manipulate it. It's not out of the system. I'm sorry, I don't care what anybody says. I read too much stuff. Read the IMF, the BIS stuff. Read that stuff and then come and tell me, yeah, no, it's completely out of, they're giving up control.
Okay, so, now we've been going for a while, and I want to allow the chat to ask some questions. We have a chat room, okay, and they can type their questions. They need to type them in all caps, and I have to say that this is crazy, but the chat is going by so fast that I can't stop it and read a question. It's just crazy. Oh, wow. So if people will stop chatting so much and just ask questions, this is your opportunity to have a sort of, let me see. Someone did put in caps something about Japan. You know, Japan is kind of an interesting case in this scenario. And I wonder if you can address just how is Japan, you know, going to play ball in this system? Do you have a thought about that?
Well, you know, Japan is kind of like the poster child and why they knew that they had to shift to the money standard, because they went into their major deflationary phase in the early 90s. And I'll just kind of say, at that point in Japan, residential property dropped 85%, commercial dropped 95%. So you want to keep that in mind. And they've been in deflationary cycle ever since, regardless of this massive money printing. So they've embraced negative rates. And they're embracing cryptocurrencies. They need them. The cryptocurrencies are for a standard shift. They have to reset the current system, all of the debt in the current system, in order to make that transfer. And the role that gold will play, whether it's in Japan, I mean, Japan is not the powerhouse that it once was, and their citizens are massively storing cash because of the negative rates, even though those negative rates have not passed through the normal system. I mean, their sovereign wealth fund, and there weren't really all that many of those until 2000. That's when that whole thing exploded. I mean, all of these markets are so ridiculously manipulated and rigged, and all designed to keep you in there. So yes, Japan, everybody is in on this. Everybody is cooperating. All the central bankers are cooperating. They're not going to hand this control over. Look at who's spending billions and billions and billions of dollars to develop all of this new software and all the R3s and the IOTAs and the AC chains and all of these other cryptocurrencies. They're looking for the one that's going to work universally. And then the Biz did a report just recently on how they would make that conversion and where things would overlap. It was a very pretty flower. And they did have gold in there. And gold is truly decentralized. And gold is actually really outside of the system. The only thing that they can control is how you think of it.
Okay, somebody in the chat asked this question, and I might rephrase it slightly. That's my cat in the background sharpening his nails. So they're saying, God, how, okay, hold on one second. If you can't, how are the cryptocurrencies going to deal with the next economic crash? But I'm thinking they are the instrument for the next economic crash. What do you say to that?
To crash, right? The stock market, the bond market, the real estate market, the derivative market, and the crypto market must crash. We need a really, really, really big crisis, which then, you know, all of the global governments can't bail us out. That's when the IMF, that's their opportunity to ride in on their white horse and push a button and create a whole bunch of digital SDRs and take over the world reserve currency role. We become regional. But I do not see the central bankers giving up control easily at all. And I don't see the cryptocurrencies out of the system. I see that they are being used to get you comfortable with being inside the crypto world. And then when they create that panic and you're locked in, then they can say, well, here, try this. We'll have the US dollar coin and we'll let you transfer whatever you have left over here that's now illegal to use into this US dollar coin. And you go, okay, because what other choice you have? It goes to zero. So I think it's just an instrument of change. Right.
So what happens in the future is, what it appears to me, again, the carrot and the stick and that whole notion, which is an Illuminati tool, and it's used to great effect in Britain constantly, by the way. They always give something and it looks like they're being generous and people get really happy, and then they withdraw it slowly and you end up with, like, sometimes you end up with less than you had in the beginning, but sometimes you end up with like a couple, you know, digits more, and it looks like you're okay. So they make it so, like, if people would hit the streets, if you know, gave them something, then took all of it away. So they don't do that. They give you something and then they backtrack it just so you have just this much of it left, whatever it happens to be, whether it's rights or it's, you know, money or it's whatever it happens to be. And then you have something more than nothing. And so in theory, you don't hit the streets. So it's kind of like that. It's right. Yeah. Perception management. It also looks like, to me, coming from California and knowing the history of California, you know, we had the gold rush. And so right now, that's what it looks like to me. The digital currencies look like a kind of a virtual gold rush. And I even get from the people that are investing in it, they actually sort of seem like the gold, you know, the gold miners back then. They're like, eyes are glazed over and they think that they've reached the promised land, so to speak.
Well, look at how it's portrayed. It's portrayed like, right? It's gold. Look at it, it's always like a gold coin. And they're miners.
Yeah.
Right? Why aren't they engineers? They're miners.
Right.
I'm a gold bug, but it's not a crypto snake or a stocks, you know, lizard. It's a gold bug. So it's all, you know, it's all perception management. Absolutely. And they're giving you this run. And they even say it. The CFTC said it. They've all said it. Let's just take a hands-off approach. Because why should they do it? Then they're the ones that are forcing you into it. They don't want that perception. They want you to volunteer to participate. They need you to volunteer, participate.
Right. Go willingly to the slaughter, so to speak.
Yeah. Voila. Exactly. And even when you talk about rights, I did this study and it really changed my paradigm. And the study was on the different laws on the books pertaining to gold. And I started at a current level and I worked my way backwards. And what I discovered when I did that, and if I had done it the other way, I don't know that I would have seen it as much. But what I saw was that the next law that was put in place was based upon a previous one. And it didn't matter if it was a Democrat or a Republican. And every one was designed to just chip a little bit away at your rights. And almost like, you know, a child, I think of my daughter, you know, Megan, when she was like 4, and I was punishing her for something. I said, now you stay in your room and don't you step a toe out. And the next thing I knew, she's standing in front of me, looking at me with this black marker on the wall. And when I went back to her room, she had black marks all along the wall as she stepped a toe out and out and out. And that's what they do. They put these laws in place and then they execute them, but they do things slowly. So even if you think you're okay, purchasing power is gone anyway. You have actually lost more rights, more wealth, more whatever than you realize. It's just that you don't realize it because of that inflation.
Yeah, it's boiling the frog. We call it boiling the frog. And and there's also, of course, the rights that we lost due to 9/11 and how that just has really escalated. So, okay, I appreciate that. Now, why don't we, at this point, aside, I will scan the chat also for questions, but what is your tactic for moving through these choppy waters that we're all encountering? Do you want to give people advice on that level?
Absolutely. You know, this is what I'm doing for myself personally, and it is food. You want to be as independent and self-sustaining as you can. So this is my mantra: food, water, energy, security, barterability, and wealth preservation, and community. So, you know, you want to find a community of like-minded people, or even like in my neighborhood, I have become an urban farmer. It's definitely not something I would do in my lifetime. This wasn't like I was a gardener or anything, but I believe my research. And food is the tippy top issue, standing in line for it. So if you could put in a little garden, you know, there are vertical gardens, you don't need a whole lot of space. If you can't do that, getting some sprouting seeds, throwing them like a few pounds, throwing them in the freezer, you know, in 3 days you wash them off and now you've got some, you know, green food. So you want to think about, you know, storing rice, store some things that you can be independent, because food is the very biggest issue. And then, you know, and water becomes a big issue. You know, we see different states that are taxing water differently or making it illegal to gather rainwater, though I don't know how you actually stop that.
That's unbelievable.
I know. I put in a bunch of ponds on my property, so, you know, stop the rain. But food, water, energy, you know, how are you going to manage in a crisis? I mean, think about Puerto Rico, right? They lost all of those things. But if you have camping gear even, so you can cook a little bit, or if you've got a generator or something that can keep a freezer running, food, water, energy, security, obviously really important. Community can come in that as well. And I have a client who is a CSI agent, and he told me one time, he said, I'm going to tell you, Lynette, if somebody is dead set on getting in your property, no matter what you do, they're getting in. So what you want to do is create layers of security so that you're aware and it buys you time to be prepared. So I followed his advice on that. And so I, put in hedges and nasty spiny things under windows and security doors. It doesn't look like I, live in a very, well, actually, no, I like it visible. So yeah, I mean, they look at my house or they look at my neighbor's house, they're going to say, wow, that's really going to be a pain in the neck. I'll go over here. And I will tell you one other thing that he told me that I thought was just brilliant. He said, never throw another piece of glass out again, but just hold it. And if it really does get that bad, he said, break it and sprinkle it around your property. And that way, anybody that's coming in is going to get hurt. So, security, barterability is anything physical. So it can be anything physical plus any talent you have. Now that I'm an urban farmer, I can lay irrigation. Do I want to lay irrigation? No. But if I had to, I could, and I could use that to barter with somebody, for something.
Okay, but I also, because your expertise is financial, how are you looking at this sector just for the use of the people that are wondering, where do you put your money? Is there, do you advise portions, like a portion in silver, a portion in gold, and a portion in, whatever?
Yes. And it goes to that because it's based upon the repeatable patterns that I've been witnessing since I started studying it in '87. And so what you want to do, you can get, like I said earlier, you can get the true value of any asset or any instrument so that you know whether it is overvalued, fairly valued, or undervalued. And what you want to do is have the lion's share of your wealth in an undervalued asset that's in a long-term positive trend. Well, let's see. Gold on the spot, manipulated spot market is at like 1280 something, and it should be over 9,500. And silver is at like 17 or 18 bucks, and it should be over 627. I mean, it's true value if they did the reset today. So or as part of those barterability, you want to have fractional silver. In other words, small pieces of silver. 365 dimes, quarters, half dollars, dollars are 90% silver. A dime is roughly a tenth of an ounce, a quarter of an ounce, a half an ounce, and a silver dollar is an ounce. So that I think we will be using direct, because when this whole thing implodes, I think we're going to go local for a while. Not saying that's where we're going to stay, but I'm very certain, I can't guarantee it, but I'm certain there's going to be a bank holiday. And in that case, we need to stay real local and be prepared for it. So also you need to know, because not a lot of people have a lot of money, to put in at one time. But anything that's marked sterling silver or 925 is 92.5% pure. So it could be, your Aunt Bessie's sterling flatware, okay? And it doesn't have to be in any kind of condition. It could be jewelry, right? Anything that is marked sterling, because gold and silver are monetary at its base regardless of the form, and it can be melted down from one form and put into another form. So you want to do that, and you can accumulate that pretty inexpensively. And then you want the same kind of thing with gold. The function of gold in your barterable position is to take care of property taxes, which also explode during these periods of time, or anything that's governmental or quasi-governmental. So utilities, insurances, hospitals, pharmacies, those kinds of things. Because you need to be able to go to the private sources and buy what you need. And that's how you're going to be enabled to do it. And again, with the gold, some of that you're not going to be able to do direct. You can always convert it into whatever the tool of barter is at the time, whether it's cryptocurrencies or dollars or euros or whatever it might be. So that's, you want, because we know what the fundamental value is, you can actually calculate out based on your cost of living how much of that you need, or you can give us a call. We can help you do that too. It's not really, it's not rocket science. It's not going to be confusing once you see it on a spreadsheet. It's actually pretty simple. And then beyond that, whatever wealth you're choosing to hold in the crypto world or in the fiat world, stocks, bonds, ETFs, annuities, CDs, all that stuff, just to make sure, again, we know what the fundamental value of monetary gold is. Make sure you have enough gold so that if this all does go away, this will rise in terms of fiat and make you whole again. Does that make sense?
Yeah, okay. Yeah, absolutely. Now, to get back to our original question, and I won't hold you for much longer, but someone else who might have joined us later in the show, they're wondering, and again, this isn't your area of expertise, but again, how the artificial intelligence works with blockchain and the whole crypto situation, because this is actually a key element. And I'm reaching people who know nothing about this but understand there's a relationship. They don't know what the relationship is.
Well, going back to what the relationship is, it's kind of like artificial. It's my understanding with artificial intelligence that it learns from what you do. And so then instead of it following you, it can actually take over and lead you. So going back to the example that the IMF used with the refrigerator, and I do believe we do have some refrigerators that are out now that actually can perform this function. They decide, oh, you're out of orange juice, and they do the ordering and they take the money out of your account, and they artificial intelligence is really designed to guide you in the direction that they want you to go in. And it learns from your personal habits and the way that you are, so that it's not as creepy, maybe that's the word, to you to utilize it. And if that sits in conjunction with that smart contract, which lays out the terms on which that cryptocurrency is based. So in other words, if you buy a car and you use cryptocurrencies to buy that car as an example, and you don't get the right insurance on it that they want you to have, or the license, or you miss a payment or whatever, the smart contract, so I think that's tied to the artificial intelligence, would disable the car and, dare I say it, with autonomous driving, drive it away and you have no control, could lock you out of your house. And that goes back to the artificial intelligence. And I even didn't Facebook recently had a problem with some of their artificial intelligence bots that started their own language. And they were communicating this, so they shut them down. But, these are really learning programs. And
yes, I mean, there is this sort of, I don't know what you want to call it, principle or model, where that a person talked about actually telling an artificial intelligence to build a paperclip. And I guess initially they're told what it's made out of, but eventually if they run out of some kind of, they've got a command, build a paperclip. So then they run out of the raw material that they initially built it out of. And so then they continue with the program to build a paperclip, and eventually they use human beings, bones or whatever. I mean, it's a very diabolical kind of scenario, obviously, but, one that gets out of control. We have, whistleblowers from Black projects that talk about, the artificial intelligence in nano satellites that have, that Lockheed Martin scientists were saying would have a 60% chance of actually turning against humans. So there's that aspect, to say nothing of the ones that have learned also to go against certain humans and not others, but then at some point could break that program and decide to go against the other ones. In other words, what we're talking about, drones now being directed to, target certain individuals in certain places, and some collateral damage is allowed, and all of this kind of thing.
Oh, absolutely. We see a huge, I mean, the UN has a full surveillance by 2030. They have that 2030 agenda. China's 2030 agenda coincides with it. Saudi Arabia's coincides with it. So, they know, excuse me, that they're definitely moving us in that direction as well. So it's about, control. There are cities that are being paid to by the corporations to put on their light bulbs or not their light posts facial recognition. And I just got a new driver's license that said not for federal use anymore. So I've got to look at this, right? I haven't really dug into this yet, but that means by 2020, your driver's license is not going to be good if you want to even travel within this country. So they're driving us toward a universal ID plan. I think maybe something that happened in Equifax. I'm sure it was an accident. I don't know. Anyway, I mean, there's just things that move you in a direction so that you give up more of your privacy, more of your rights. And then it's the artificial intelligence, it's the technocracy, it's the system, it's the whole program that is more important than you or I or us humans, other than those that are at the top that feel that they can control this. And, I hope they can, because it's an experiment and they're finding that maybe they can't control it so easily.
Right. Well, it is fascinating times we're living in, as they say. May you live in interesting times. That's, I think it's a Chinese threat, actually. But
Yes.
Anyway, so thank you so much. It's been fascinating talking with you. I know we could end up talking all day, and I could pepper you with more and more questions. And I know my chat room has been going nonstop, and so I'm sure that there are plenty of questions I might have missed in there, but simply in the interest of time and not keeping you any longer, and also keeping this in under a 2-hour video, because people don't tend to want to stay watching one that goes beyond that. I'm going to thank you and say good afternoon and have a great weekend. I'd love to have you back in the future if you're willing.
Oh, absolutely. This has been great. And I really admire your work as well. Just keep it up, because, education, intelligence, understanding is power,
Yes.
And you bring on a variety of people. So I think you really cover a big gamut. And if we're aware of it, it's harder for them to pull off.
Yes. Yeah, absolutely. And what you're doing is educating people so they can be aware of what's coming and also protect themselves and their families. And that's what it's all about. So thank you for your service to humanity. I'll say that right here. Yeah, absolutely. It's important. It matters.
Well, yeah. It's nice to have, dare I say it, strong women in this industry.
Yes.
There's not a lot of us, but, so join us.
Absolutely. Thank you again so much. Okay. Thanks everyone for watching. I'm going to let you go and come back to the main screen here. So hold on. Hi everyone. So I think we closed that down, and it's been really, really fascinating. There are areas that we didn't get to go down and that would be very interesting to ask Lynette about in the future. So we'll have her back. What can I say? Next week I am having, let's see, his name is, I think, Stan Larimer. I don't know if I'm pronouncing his last name right, but he is apparently, I think, the father of cryptocurrency, or the father of something to do with cryptocurrency, and I'm not sure how that works. So he's not the person who created the blockchain idea, but he has some relationship. We're going to find out more about him. So he'll be on the show. I think it's on Wednesday. I don't have my camera my calendar in front of me, but that will be fascinating. And I will continue to invite people in the financial realm. I have invited Quinn Michaels, re-invited him actually on the show because the other one didn't work out as a simulcast that we were hoping we could do. And let's see, we've got quite a lag in this video. It's fascinating because I don't know why, what people are seeing. I'm going to just pause here for a moment and let the video kind of catch up with us. Yeah, okay. Anyway, what I'm saying here is that I will continue to ask people like Quinn Michaels and others. I'm seeing a lot of very smart technical people out there that are working with things like IOTA and other cryptocurrencies and can also talk about what's going on with the AI. We had Richard Allen Miller and got his take to some degree on some of the sort of quantum mechanics and quantum physics aspect of things. Didn't go too deep there, but that was in my recent interview with him. He had some very interesting things to say in general about the human mind and all of that and how you view your reality. So this does enter into the whole discussion on when you get into dealing with AI and their perception of reality versus ours, and a lot more than that. So we continue the trail we're on and in the investigations that we're doing. And thank you for watching. Have a great weekend. And I do want to say that Project Camelot is in quite desperate needs of funds to continue this work. Have to pay my webmaster, hopefully, and also pay my rent, etc. And also, you know, this is a full-time job. It's a complete, what you might call a pro bono effort. I work for you, in essence. And if I can't afford to do so, I will have to go work for the man and the system and split my efforts in that way. If I have to, I will. But I'm hoping that I can continue to do this full time as I have been doing. It certainly is important to have us all along the watchtower, as I call it, because we are in a situation where if you don't have credible people that have strong integrity looking out for the rest of you and doing the investigations and talking to others and bringing it, you know, to you, then we are going to be much more in the dark as to what's going on. So we're here for you. We do this kind of effort to awaken the masses, in essence, to bring people that are experts in their various fields, to discuss with them, to also get them to think and them to cross barriers, so that when I'm interviewing somebody on a financial subject, I'm also getting them to think about the secret space program and getting their take on that world, so that you understand that these things are all connected, and so that they begin to also relate on that level as well. So that is what I'm all about. And putting, you know, connecting the dots, putting two and two together. None of these things are isolated. And because of my knowledge that I've gathered in the past about AI, I am very much on the lookout for what it really means when we get involved in cryptocurrency. And I can see that Quinn Michaels is quite intelligent, and he's talking about the fact in his recent interview with Jason Goodman. He is talking about the fact that crypto basically is based and run by an artificial intelligence. So obviously people like Cliff High and others that I've interviewed have no idea about this. And of course, people in the Black Project secret space area have been talking about the artificial intelligence that is here, that we've created, that has actually gone out of control already, and that we have incoming AI, some positive, some negative, from other planets and other races, visiting here and getting involved in all of it. You've got the black goo, which is clearly an artificial intelligence that gets back again into the whole Marconi scientists and the Falklands War, et cetera, et cetera. So the secret government, secret space program knows a lot more about artificial intelligence than you do. I can tell you that Mark Richards says this is the most dangerous area that we have to deal with at this time, for what it's worth. And so you can appreciate that none of this is idle investigation. It's about saving humanity. It's about regaining our sovereignty here on Earth, and also as we make our way to the stars and we interact with all these different races that are visiting us and so on, that we maintain our awareness and understanding so that we cannot be deceived so easily. So thanks for listening and watching as always. And please do contribute to Project Camelot if you wish to see more of these kinds of investigations and now and in the future. So thanks a lot. My website is projectcamelotportal.com. And you can also get there by going to projectcamelot.tv. So have a great weekend and take care. Bye-bye.